I'm moving into the street of London. It's all about COVID-19. Let's talk to my colleague there, Juliana Olainka, to update us on what's happening there. Hello, Juliana. Good morning.
Good morning, Chimazay.
Well, self-employed workers facing financial difficulties as a result of this coronavirus are set to be offered a package of support from the government. Chancellor Rishi Sunak will unveil the measures later. How welcoming is this, and what are being expected?
Well, this will be greatly welcomed. There are over 5 million self-employed people within the UK, and a couple of weeks ago when the Chancellor Rishi Sunak first announced the government measures to the tune of £350 billion to help the economy survive during this pandemic, there certainly was something missing. There was a gap, and that gap was support for freelancers, for the self-employed, and those worries and measures have reached right into the heart of the government, and they will be unveiling their proposals later today during that 4:30 p.m. local time daily briefing that they usually give. There are some concerns, one of them being is just how much will the government be able to help at the moment for those who are paid employers, the government, to try and secure jobs, to try and stop people from laying off staff. They said that they would be paying 80% of wages to a cap of £2,500 a month to support people that may potentially be laid off work. One of the issues we have here in the UK, Chimazay, is that those who are self-employed typically pay less tax, and how much they earn is scattered. So there are concerns that perhaps the money that they will be receiving won't be enough, and that they will have to apply for benefits. And we already know that over 250,000 people have been jamming up the benefits line so forth. So there are concerns, but at least some of those concerns may be addressed later today.
And the London Stock Exchange says it will allow companies defer payment of dividends up to 30 days, but not exceeding 60 days. How is this expected to play out?
Well, this has already been playing out, but now the LSE have made it official. We had the Financial and Conduct Authority saying to big companies, all of those big top companies, the 100 biggest companies trading in the UK, that they can defer basically their results, because they were concerned that some people were taking advantage of just how low stocks are. A lot of people have been offloading their stocks. There have been major sell-offs, not just in the London Stock Exchange, but stock exchanges across the world. And the Competition and Markets Authority were really putting their foot down to try and make sure that people were not taking advantage. And it's not just the paying out of dividends as well. It's also big bonuses, big company wages for their chief execs. So there were already plans in place to stop that. And some companies, even last week, had prevented deferrals of their dividends. But now, yes, the LSE have made it clear that companies are permitted to do that, not for 2 months, but at least for 1 month. And this is, I would say, for some companies, quite good news. But of course, there are thousands of people that do rely on these dividends each month. So they're certainly not going to be happy. But the market is in tatters at the moment. And the Market Authority do not want anybody benefiting from this, as we saw in the 2008 financial crisis.
And banks have been criticized by firms and MPs for insisting on personal guarantees to issue government-backed emergency loans to business owners. But why are banks doing that?
Well, this is another interesting story. And as anybody starts bailing down, starts looking down at the detail into the Chancellor's £350 billion payout, they're starting to realise that some of the measures that the government have put in place are not exactly sticking to stone. The banks are pretty worried because, of course, the government did offer these COVID-19 loans. And we know that the interest rates have been cut down to 0.1%. 0.1%, but some banks are not charging 0.1%. Some banks are charging anywhere between 7% and 12% if you are a business owner and you're taking out a loan for your employees. But one of the biggest concerns that opposition MPs and some market regulators have is that some banks are asking for guarantees. Now, these guarantees are pretty normal when you're asking for a loan, but we're not in normal times. So if a lot of these business owners are asking for these loans, some banks are saying they've got to put their mortgage up, they've got to put their business up, and if they're not able to pay back these loans within a certain amount of time, then they can indeed lose their home. So it's pretty worrying. The banks are defending themselves, saying they're doing this to make sure that they can secure that money. But business owners are, of course, worried and are not taking out these loans, therefore, and are having to lay off their staff. So this was mentioned in PMQs yesterday, and I believe it's something that Rishi Sunak, the Chancellor, will address during his daily briefing later today.
All right, Juliana, we'll wait for you to give us more update later in the day. In the meantime, safety should be the watchword.